I wanna be forever young. I wanna be forever. Welcome to another YouTube video. In this video, as you can see from the title and the thumbnail, we are saying once again, fuck ICT. He does not know how to trade. And for all of you ICT traders and traders in general that don't know or are not profitable just yet, don't worry anymore. I am here. I'm going to teach you step by step and show you examples of why. When you use FVGs instead of using SNDs, you are literally just giving your money to the market makers. That you guys love to think that smart money is a thing and there's no patterns, whatever. I'm gonna show you examples, like I said, and basically just teach you the rules about SNDs, step by step. And as always, all links in the description. Don't forget to sub, like, comment, and all that bullshit. Turn the notice on. But let's get right into the motherfucking video. All right. Actually, let's put it right here. No. We're gonna put it here. We're gonna put it right here. Make it big so you guys can see me the whole time. All right. Fuck. Okay, so right now, let's get right into it. We're gonna take some stuff off, but first of all, I want you guys to go ahead and look up mentfx structure indicator and the mentfx. Actually, yeah, just structure indicator, and we're gonna put that in our charts. We're gonna hide the premium version, and I'm going to show you why. Okay, so I'm pretty sure I had all my examples. I hope they were here. Yes, they were. So just to give you guys here. This is my SND. We're going to label this as the SND. Boom. Good to go. Okay. That's how I entered. And that's how I got this trade right here. And also this trade that was a 1 to 4. And this one right now so far, I'm pretty sure it's like a 1 to 1 or something. Nothing horrible. Here's the profits so far from these two trades from Bitcoin and Ethereum that I'm going to go over with you guys, showing you the examples of why it's just better. It's just worthless. Honestly, worthless to use FVGs. But yeah, okay. So SND entry, perfect. It taps the SND after it does the break, right? We have our SND that gets tapped after this break right here. Price goes, comes back, and basically the delivery is break. Right, we get our break. SND left behind. High that gets established that usually that can be a target for our trades. We have price that comes down, taps the SND, we get our entries, and we go. And that is the delivery. Boom, boom, delivery right there. So that's the plan every single time. You're going to see it over and over and over. Break, SND, then SND mitigation to then getting our target met, which is usually the high or the low if we're shorted. But yeah, okay, so just delete this. So that's that. Now, if we would have, in this example right here, used an FVG, right, from this break right here, can you guys see what would have happened if we would have used the FVG? Would have entered somewhere here, put our stops at the low, and that would have been our first loss. Okay, that's perfect. That's fine. Then we get our second entry right here. We would have put our stop loss at the low of the FVG, and lo and behold, it would have been our second loss. But because we used the SND, and I'm going to go over the SND rules right after this, after I give you some examples of why it just makes sense to use SNDs. Yeah. Okay, the SND would have ran. Now, let's go back to this one. In this example, if we would have used an FVG, okay, boom, boom. Okay, you guys can see it. Once again, the entry would have been somewhere here, and we would have gotten stopped out once or twice. I'm not too sure, but we would have stopped out, and then price would have invalidated the FVG right there. Price would have invalidated the FVG right here, and then ran without us. Same thing as here, ran without us. But because we used an SND, which you guys can see it, SND, the 3M way, boom, we entered and we made money. Back here, the exact same thing. We get our SND entry. This I did not take myself because it was not valid, but SND got respected. Meanwhile, the FVG did not get respected. And guess what happened? Price ran. Do you get that? That's why a lot of like ICT shit, it's like you guys are counter trading a lot of the time instead of following the trend, right? Like a lot of my ICT like people that I know, I wouldn't call them friends, but the people that I know that trade ICT have been trying to short Bitcoin this whole time, and guess what's been happening? And that's what people say. ICT traders say no, like it only works for futures. It only works instead of saying like, yo, it works for every single market. Like everything that I'm showing you right now, I could give you examples in gold, I could give you examples in silver, crypto, Bitcoin, everything, stocks, Tesla. Like we can go ahead and Nvidia had an SND on the daily that you could have entered and take it to the high after it had a big drop this year. The only drop that it's had during the summer, you could have entered and they ran it up to all-time highs after the split. Instead of using an FVG that, well, there was literally none. Okay, more examples right here. And this one is crazy. You could have used, if you used this SVG, what would have happened? You would have entered right here and you would have gotten stopped out. Another FVG somewhere here, you could have entered and then gotten stopped out. But instead of that, if you'd have used the SND, you would have entered, and guess what? Boom, 1 to 6, or even more. If you had a different way to take profit than me, you could have banked even more. Which that's the crazy thing. If you would have traded your stop loss to the low of the breaks, you could have made a 1 to 19. Of course, that comes with back testing and journaling, you know, to really know how much you can really juice out of these markets. But that's enough for the examples. Let's get right into the rules of what the fuck an SND is and why we would use the ones that I've just shown you. Okay, so we're going to go and look at, let's look at a pair that's somewhat good. We're going to go ahead and look at UJ just to show you guys that it also works on Forex. Where the fuck is UJ? Okay, UJ. Okay. So we're in UJ. And we're going to go back here. Sure. Why not? Okay. So with the help of the indicators, and yes, if you guys want to know the exact methods and everything of every single rule in every single of every single concept that I showed you, that I show you in these videos, check the link in the description or head over to 3m/trades.com and you're going to be able to claim your free trial. Yes, there is a mentorship. You don't need to use it because I'm literally showing you the rules right here. But yeah. Okay. So rule number 1, is there a break? Does the indicator show me a break? Yes. So we have our break and then we have our low that gets established. Now, where was the down candle that made the push up? Because we need a down move before an up break. So right here we can see that this is the candle, this down candle, right, or red candle, whatever we're gonna call it, is black. So we're just gonna say down candle. This one was the one that made the move, right? It was the last down candle before we had our big push up, which is the one that made the break. Okay, so this was the candle, but. So step 1 was, is there a break? Yes, there's a break. Okay, boom, perfect. Step 2, identify the candle, the down candle that made the up move. We identified it. It's right there. Step 3, we're gonna ask ourselves the question: is this candle mitigated or unmitigated? What does that mean? It means that after the candle got created. Did price ever leave its range, the candle range, because candles have a range, a high and a low? Did it ever leave its range? So was there, like after price left, let's say there was another candle right here, right? At this point, you guys can tell they can't, like we have this range, right? Price played along here and then left it, made a high and closed right here. But at this point in this example, if price keeps on going higher, this candle has never gotten mitigated. But as soon as the price comes back in, that candle has been mitigated. So The answer to the question is this candle is already mitigated. So this SND cannot be used because every single candle is an SND. So yeah, so what mitigates it? So we have the range, high, and the low of it. And the candle that comes right after, what does it do? It wicks out. It wicks out. It wicks back in and closes right up here. So that means that price left it and came back inside of it. So it's mitigated. So what do? We go to the next candle right after that. Is this candle mitigated or unmitigated, or is it mitigated or unmitigated? Fuck, these words are okay. Is it mitigated or unmitigated? It's mitigated. Why? It's not mitigated. Sorry, fuck. It's not mitigated because we had the range. We had this candle, the next candle, open here, come in here, never leaves it. And when it does leave and the break happens, it never comes back. So in this case, this is unmitigated. So we are valid to go ahead and look and wait for price to come back down to the SND to then take the high if we do get an entry. Right? So do we get an entry here? Nope, we don't. That's completely fine. Now we're going to wait for another break. Okay. Now we do the same thing. We get our break. Okay, we got our break and we got our low established. So here, second question. Which is the down candle that made the low? That made the push up, the last down candle before the push up. This one. Is it mitigated? Yes or no? Yes, it is. And please leave in the comments. Answer my questions in the comments. Pause the video and answer the questions to see if you're right or wrong. Okay, why? Now answer in the comments. Because price leaves it in this next candle and then it wicks back in and closes right here. So yes, price left it and came back in it. So we go to the next one because this one is already mitigated. And we wait and see if price wants to come back down here, give us an entry to then take out the high. Do we get it? I'm not sure. I don't remember. We don't. That's fine. So now we have another break. So we do the same thing. Is there a break? Yes. Where is the last down candle before the push up? It would be this one. So we get that. Is it mitigated? Yes. We can clearly see that price has left in the next one. So we go to the next one. Is this next candle mitigated or unmitigated? We can see that the next candle right here came back, wicked back in. So it's mitigated. We'll go to the next one. Mitigated, yes or no? Yes, we can see that this one, the candle after it, ended up leaving and wicking back in. So we go to the next one. And this is it every single time. Of course, with time, you'll be able to see this a lot quicker. But yeah, so next candle. Did price leave and come back? Yes, it did. With the next one, boom. On to the next one, the same thing. Those price leave and come back. Now, this one's a little bit different because price played, price open here, played around in here, but then it did leave, but it closed right here. So this candle didn't mitigate it, but then this next candle opens here, wicks back in and leaves. So that would be mitigated. So we look to we ask ourselves the same question with the next candle, and in this case it's not mitigated. Why is it not mitigated? Because price open here, came down, and then left and closed here. But at this point in this whole part, price never came back in it. So we are good to wait for price to come back down here and maybe give us an entry. We'll see if it happens. Okay, now that it gives us an entry, we're just waiting for a 3M candle, which we can see it with the indicator right here, 3M indicator, boom. And if we get it inside of the SND, we're going to buy stop that candle. So we'll buy stop the high, put the stop loss below the low, and see what happens. Okay, we get tapped in. Perfect. And it runs. Okay. So this one would already be break even and already have one partial out at 2R, but that's not the point of this video. Now we're going to go ahead and look for another entry. Okay, so now there is another break. Where is the SND? We're gonna look for the last down candle before the move up, which it's honestly you gotta look close to the low. Okay, so this down candle would not be it. It'd be the one closest to the low, which in this case would be this. So right here, what do we have? Is this mitigated? Yes, it is. You can see that this wick and this wick left price and came back in it. So next one is a mitigated. Yes, same thing. Price leaves with this wick and wicks back in. So now we can look at the next one. And is it mitigated? No. Price fucked around in there after it opened down here, and once it left, it never came back in. So this is the SND. We're gonna go ahead and see if we get an entry. All right, we get the entry right here. Buy stop it, stop loss above the high, a little bit above the high, and stop loss a little bit below the low. So not right on the low, but a little bit. So we're in. Is this gonna be a loss? Is it gonna be a win? Okay, so you know, this could be a win, this could be a loss. It doesn't really matter. We're going to leave it at that. It ran a 1-to-1. That ain't shit for me, but could be good for you. Okay, so now the exact same thing over and over and over. First, you ask yourself, is there... Motherfucker, bro. This microphone is fucking with my typing. Is there a break? Next, you ask yourself, where is the low? And then you find the unmitigated SND candle by candle. And that is basically it. That's all you need to know about SNDs for a more in-depth version of this. And here, just for fun, what we're going to do before I finish the video, we're going to see if these trades would have ran. So, yeah, this would have ran even more. And the first one that we had would have run even more. We're going to run it until... Oh, shit. Okay, we're going to put this up until current time and see what it would have done. Just so you guys can see the magnitude and the power of actually listening to what I'm telling you. I haven't looked at UJ this whole time because it was not really valid for me. But just so you guys know, this was done completely blind. And this one would have ran a 1-to-11. And the first one would have ran around a 1-to-17.5. And now you got the rules. And you can see why it's so much more superior to actually just trade the 3M way instead of using FVGs that don't really work. So, yeah, let me know in the comments if you fuck with this video. Don't forget to leave a like. And, yeah, subscribe and hit the notice on. I'm going to be dropping 2 to 3 videos every single week. Crypto updates and everything in between. And I'm going to make you motherfuckers profitable. Because at the end of the day, crypto is not a hobby. Crypto is a fucking job. And we're here to make a bunch of fucking money. So throw that. Believe in your fucking self. Check the links in the description. If you think that I could be a good mentor for you, if you fuck with this shit, you actually want to make money, let me know. But yeah, that's the fucking video, I guess. Nothing too complicated. I don't know why people make trading complicated or fancy. I'm not here to entertain you. I'm here to make you fucking money. So thank you for watching. Oh, wow. That dropped. Peace out.